In the winter of 1980, two brothers had quietly piled up one of the largest private hoards of silver in human history. Roughly a third of all the silver the world could freely trade. Not a king, not a country. Two Texans who had decided that paper money was a lie. For 10 weeks, they very nearly owned it all. And then, over a single brutal week in March, the brothers went from a multi-billion-dollar fortune to the largest private debt the financial world had ever seen. That is not a typo, and it is not a crash nobody saw coming. They were ruined by getting almost exactly what they wanted. So here is the riddle this whole story turns on, and by the end you will understand it completely. How do you go broke owning too much of one of the oldest and most storied precious metals on Earth? To understand it, you have to understand the man. Nelson Bunker Hunt was not a Wall Street trader. He was the son of the richest oil man in the world, raised on the idea that the ground beneath Texas would simply keep making his family wealthier forever. But by the 1970s, Bunker looked at the world and saw rot. Inflation was eating savings alive. The dollar bought less every single month. And in 1971, America had cut the last thread tying its money to gold. To Bunker, that meant the money in every American's pocket was now just paper, backed by nothing but a promise. And he did not trust the promise. He became convinced that one day the whole system would come apart. So he asked himself a simple, dangerous question. If paper money is a lie, what is the truth? What is real money, the kind no government can print, the kind that has meant wealth for 5,000 years? The answer, he decided, was silver. Not stocks, not bonds, not even gold, which private Americans had only just been allowed to own again. Silver was real, it was scarce, and best of all, it was cheap. Around $6 an ounce. And here is where a private worry became a world-changing plan. Bunker did not just want to protect his fortune with silver. He wanted to buy so much of it that he would control the price itself. On Wall Street, there is a name for that dream. It is called cornering a market. It means buying up so much of something that when anyone else needs it, they have to come to you and pay whatever you ask. It is one of the oldest fantasies in finance, and almost nobody has ever pulled it off. Because to corner a real global commodity, you need almost unlimited money. Bunker Hunt happened to have it, and a brother willing to help him spend it. His brother, Herbert, was the quieter one, careful where Bunker was bold. Together they made a strange, perfect pair, one dreaming of owning the world's silver, the other keeping the books as the dream got bigger. And so, quietly, in the mid-1970s, they began to buy. Not a few coins, not a few bars, millions of ounces at a time. And they did something almost no investor did back then. Most people who bet on silver never touch it. They hold a paper contract that says they own it, and they trade the paper. The Hunts wanted the actual metal, the real, heavy, physical thing. So they took delivery, truckloads of silver bars. And because they did not trust American vaults to stay safe if the system collapsed, they chartered planes and flew the silver across the ocean to Switzerland. Picture that for a moment. Armed guards, private jets, tons of gleaming metal crossing the Atlantic, all so two brothers could bury their fortune in Swiss vaults, safe from a future they were sure was coming. And then they noticed something intoxicating. Every time they bought a huge block of silver, the price ticked upward. Their own buying was making the metal more valuable. Think about what that does to a certain kind of mind. Every purchase made them richer on paper, which gave them more collateral to borrow against, which let them buy even more, which pushed the price higher still. It was a machine that seemed to print money. And somewhere in that spiral, the fear that started it all curdled into something else. Not just silver will protect us, but we could own it all. That is the quiet turn most people miss in this story. It stopped being about safety. It became about power, about being the two men on earth who owned the thing everyone else would eventually need. But cornering the world's silver is not a thing you can do alone, even with a fortune. So the Hunts found partners. wealthy Saudi sheikhs quietly, with pockets nearly as deep as their own. Now the buying was not just huge, it was relentless, coordinated, coming from every direction at once. And by the end of 1979, the numbers had turned genuinely frightening. Between them, the Hunts and their allies controlled roughly 195 million ounces of silver. To put that in human terms, something close to a third of all the silver on the planet that anyone could actually buy. And the price told the tale. Silver had started near $6 an ounce. Now it was climbing so fast that traders on the exchange floor stopped what they were doing just to watch the number move. But here's what nobody expected. The Hunts were about to get help from the one force more powerful than any billionaire: the crowd. Because a rising price is a story, and this story was irresistible. Two Texas oilmen were beating Wall Street at its own game. Silver only went up, and ordinary people wanted in. So they came. Regular families started digging through drawers and jewelry boxes, not to buy silver, but to sell it. Because at these prices, Grandma's tea set was suddenly worth a small fortune. Lines formed outside coin shops. People melted down heirloom candlesticks, wedding silver, coins saved for decades. A metal that had sat forgotten in cupboards became the most talked about thing in America. And still the price climbed. $20, $30, $40. Each new high pulled in more believers, and each new believer pushed it higher. This is the engine of every mania in history. The price rises because people buy, and people buy because the price rises. Then, on a bitter cold day in the middle of January 1980, it happened. Silver touched $49.45 an ounce. From $6 to nearly $50 in little more than a year, a rise of more than 700%. On paper, the Hunt brothers' silver was now worth billions. They had, it seemed, very nearly done the impossible. For a few golden weeks, the financial press of 1980 called Bunker Hunt the richest man alive. Together, the family and their partners sat on a paper fortune of nearly $7 billion, built almost entirely of a single shining metal. But remember the word paper, because a paper fortune is only real if there is someone, somewhere, willing to buy it from you at that price. And that is the crack that runs through this entire story. Here's the part that ties the noose. To keep buying all that silver, the Hunts had not just spent their own money, they had borrowed enormous sums from banks and brokers, using their silver as collateral. Read that again slowly, because it is the whole tragedy in one sentence. They were borrowing money against silver to buy more silver, which pushed up the value of the silver they were borrowing against. As long as the price rose, it was genius. But that same rope works in both directions. If silver ever fell, the collateral would shrink, the loans would come due, and they would be forced to sell the very thing whose fall was ruining them. And now the people who ran the market were getting scared, not of the Hunts going broke, of the Hunts winning, of two men actually cornering silver and holding the whole financial system hostage. So the exchange did something almost unheard of. In January, the officials who ran the silver market changed the rules in the middle of the game. First, they made it far more expensive to buy silver on borrowed money, choking off the very fuel that had driven the price up. Then, they passed something called liquidation only. In plain words, liquidation only meant this: you were no longer allowed to place new bets that silver would rise. You could only sell what you already held. Overnight, the door marked buy was welded shut. Only the door marked sell remained open. Think about what that does to a corner. The Hunts' entire scheme depended on an endless line of new buyers. The exchange had just turned that line away and pointed everyone toward the exit at the same time. The price stopped climbing. Then it began to sag. And this was the moment for a sane man to walk away, to sell into the last of the euphoria and keep his billions. But the Hunts could not think that way anymore. They were no longer investors protecting wealth. They were true believers defending a kingdom. To sell would be to admit that paper money had won, that the whole crusade was wrong. So instead, they did the unthinkable. As silver fell, they borrowed even more and bought even more, trying to hold the price up with their own bare hands. They were catching a falling knife and calling it faith. And then came Thursday, the 27th of March, 1980, a day that traders still speak about in a lowered voice. Silver Thursday. There was no line of buyers left. Everyone who owned silver wanted out at once, and there was almost no one on the other side. So the price did not drift down. It fell off a cliff. In a single day, silver lost roughly a third to a half of its value, collapsing to about $10.80 an ounce. A fortune's worth gone in the span of one afternoon. And now the machine that had made the Hunts rich ran in reverse, and it ran fast. As the value of their silver crumbled, the banks came calling. This is the moment everyone who borrows against an asset dreads. The margin call. A margin call is simple and merciless. It is the lender saying, your collateral is no longer worth enough, so pay us the difference right now in cash. And the number on the Hunts' call was staggering. They were told to come up with roughly $100 million immediately. And here was the cruel joke at the center of the riddle. They owned more silver than almost anyone on earth, and they could not raise the cash. Because every ounce they owned was falling in value by the minute, and if they tried to sell it to raise the money, that very selling would crush the price even further. Their wealth had become a trap that tightened the more they struggled. That is the answer to our riddle, arriving at last. They did not go broke because silver was worthless. They went broke because they owned so much of it, bought with so much borrowed money, that they could never sell without destroying themselves. The metal did not protect them. The metal owned them, and when it fell, it dragged them down with it. That nearly $7 billion paper fortune did not just vanish. It flipped. It became a shared debt of around $1.7 billion. And the danger did not stop at the Hunt family. They owed that money to major banks and brokerages. If the Hunts collapsed and could not pay, those firms could collapse too and drag others down after them. For a few tense days in the spring of 1980, the failure of two Texas brothers threatened to crack Wall Street itself. In the end, a group of banks arranged a massive rescue loan, not to save the Hunts, but to save everyone else from them. The brothers held on for years, but the empire was finished. Lawsuits followed. A court later found they had conspired to corner the market, and Nelson Bunker Hunt, once called the richest man alive, eventually filed for bankruptcy. So sit with the strange shape of it. A man so afraid the world would fall apart that he tried to buy a piece of it he could hold forever. And in reaching to own it all, he lost nearly everything. It was never really about silver. It was about the oldest hunger there is, dressed up as caution, the belief that if you could just own enough, you would finally be safe. Greed wearing the mask of fear. The Hunts got almost exactly what they wanted. They nearly owned all the silver in the world, and that, precisely that, is what destroyed them. The prize and the punishment were the same thing. Every collapse hides a paradox like this one. A moment where getting what you wanted becomes the very thing that ruins you. If you want to see the next one, subscribe, and I will tell you how it fell apart.